Welcome to a new update in which we got some serious movements of Bitcoin, which has been rallying towards 17.2k and it's approaching a resistance zone all across the markets as altcoins have been shooting up massively as well, and people are currently into the fact that they want to rush into the markets as they see big green numbers. The engagement on social media has been accelerating as well, so that's a good sign. But in order to have some more momentum on the markets, we definitely need to see more continuation, which we will be discussing in this update. But before we continue, make sure to hit the like button and subscribe to this YouTube channel if you do enjoy the content. And I'll be going towards Cape Town on Friday. If you are into Cape Town, we're going to host a meetup later this month, so check out my social media if you want to join. And finally, we do have a free trade letter posted 3 times per week. Today it's going to be about macro, and it's about the thesis that we have when it comes to the markets, as the markets are starting to shape up quite nicely, and we might be getting some continuation later this year, as right now everybody is cheering up for a rally of Bitcoin towards 17.3k. Yes, 17.3k. It is still 52k lower than the all-time high, and we already see the euphoric bullishness across the markets. Why did we actually start running? I always have a reference, which is the Forex Factory website. On Friday we got the data of the unemployment rate, which was worse for risk-on assets than expected, and this ultimately resulted into a temporary rally of the dollar going up and the risk-on assets selling off, as we saw the unemployment rate dropping while the expectations were that it was actually going to run a bit up, and that is a sign that Powell can continue with his policy. So if you want to see Powell adjust his policy, you want to see the unemployment rate go up. But instead we got it going down, so they can continue doing the hikes to actually push the inflation down, as that's still the primary goal. The second one is labor, and as labor is just doing fine, they will not be adjusting their policy, and they will continue to do their hikes, and I'll get to that in a little bit. But then 1.5 hours later we got the PMI number, which is for services, which hit the lowest number since the COVID pandemic breakout and since 2008. So this is showing that a recession is going to come. And because of the number dropping below 50, the entire market reversed. So we saw the dollar crashing, we saw risk on having a massive relief, we saw Bitcoin going up as well and gold rallying. So the thesis right now is that based on the PMI number going towards 50, the markets are pricing in that Powell will be adjusting his policy and that they will not continue to do the hikes. But you want to see the labor rates doing what they need to be doing, and then that is that the unemployment rate goes up. And then finally you want to see that CPI is going to go down more than expected. So that's the key trigger for this week, as tomorrow we will see Powell speaking, which is going to be at 3 p.m. for me, which is going to be during the afternoon. He will be speaking, and it's hard to believe that he will become bullish dovish all of a sudden, in which the most likely thesis is that we're going to get a correction taking place, and then the next big one is on Thursday, which is CPI. If this comes in lower than expected, as the past times it has been dropping quite swiftly, so if this drops beneath 6.5%, the markets are going to react in a positive way. So it's going to be a very volatile week, but still the key trigger is to avoid becoming overly bullish after a move like we have seen right now. Here you can see the DXY and the expression of it, in which we started the run up here on Friday and the crash after. Right now we are into a territory which is most likely going to produce a bounce, as right now we are seeing an overextended move. The DXY needs to reclaim the level at 103.53 points, which ultimately also results into the Euro USD taking all the liquidity above the highs, right? And then finding enough space to at least have a significant correction taking place before we can continue the actual uptrend. So for Forex has been showing some significant moves, and also the yields have been showing a move, which I stated that most likely it's going to turn around, and at this point it looks like it will. in which if we lose the low here for the 10-year yields, most likely we continue to tumble down and continuing the downtrend, which is going to result into risk-on assets doing really well. But in the meantime, we probably are going to have one slight bounce when it comes to Powell speaking. And now we also have the Nasdaq, which showed a slight bounce, currently still in support area. Trend is still down, so the amount of tests we had on the support is massive here. Probably another test of the low will probably produce a break to the downside, and then we get towards Bitcoin, which has been seeing this breakout and has been seeing some momentum here, in which we can see that the crucial resistance zone, which is around 16.9k, broke. So this entire resistance zone that we have at 16.9k, we broke it. We tested it first, fake out, another drop south, didn't make a new low. I was actually expecting us to break south even more, and we started to rally, through which we are getting into the crucial resistance zone, which we have here at 17.4, which probably will not be breaking at this point. It will take time before we actually break through crucial levels. It's the first test, and probably traders will be looking at a case where they take profit in this region. So in that case, most likely we're going to get a test here, break south again when it comes to Powell, or we're going to have a test at 17.1 and rally towards 17.4. Powell speaks and we drop again, and at CPI we're going to make a bounce back up. So now we're in the middle of the pack. If you're not having a position yet, it's most likely not the time that you want to get into one or chasing one based on the 4-hour price action at this point. I think you clearly want to wait until the markets are going to give you a clear-cut trade solution, because at this point you're simply just chasing a trade in the middle of the pack. In that way, the levels are quite clear. I think 17.4 is the final hurdle. If we break 17.4, we probably are going to have a very massive rally at this point, in which we just continue the upwards trend. And then we can continue rallying towards 20.6 or 22k. But before that, we need to build up some stamina before we can get there. When we look at Ethereum, same view. I was looking at such a trade if we are going to have a correction. Started to break through the crucial area. Ether is a bit more stronger than Bitcoin at this stage, and you can see that this block produced the first test, and we had a correction before continuing the rally. In that way, Ethereum is getting towards the next resistance zone, which is the final one before we start to rally towards 1600 points or $1,600. In that way, I think looking for some short-term shorts is not a bad option at this point if we clearly reject at 1340. And then you can start looking for longs on the lower side of the range. Also looking at a few altcoins, massive runs. Why are they doing this is essentially that the liquidity has dried up. So if they want to accelerate and all the shorts that are getting stopped out, it can rally quite fast. And that's what we can see here. So I would definitely avoid chasing them. It's a big move to the upside. I think that if we are going to have a relief, altcoins are going to continue shooting up. But at this point, it's time to wait for the higher low if you are not into position yet. And I think that you're clearly looking at Bitcoin producing a retest at 17.4k and then falls out before we continue the rally. And I think that Powell and CPI will be the key triggers to watch during this week. Tomorrow I'll be making a new update again when it comes to the markets. Make sure to hit the like button and I'll see you again soon. Ciao.